Good Monday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show. Before we get started, please take a look at the disclaimer that's being shared. Be aware that neither Market Chameleon, Dimitri, or myself are registered investment advisors or a broker dealer. If you're looking for investment advice, please seek out a registered representative or a broker dealer. This show is for informational purposes only, concerning Market Chameleon tools and features. With that, one last look at the disclaimer. How are you doing this morning, D?
Good. How are you doing? Well,
Good.
thanks. I'm going to share my screen, um, and a few notes before we get started. Um, Will and I, we do these shows in the morning to try to help answer questions you may have about the Market Chameleon tools, the data, or the analytics. And if you do have a question, type it into the live chat on YouTube. Will's keeping an eye on it. He'll let me know, read it back to me. And to give you a couple minutes to type in those questions, we're going to start out taking a look at our pre-market report to see if we could get insights, what's going on in the pre-market hours, and then we'll move on to our questions. Also, another note, tomorrow we're going to do a webinar at 2 p.m. Eastern with Interactive Brokers. We're gonna talk about a new tool that we published. It has to deal with contingent stock trades and contingent option trades. I think it's going to be very interesting because usually this is something that's not really discussed. It's kind of overlooked. And there are major advantages to using, contingent trades that you should know about. And we're also going to discuss analyzing some of those contingent trades that we could observe trading in the market, right? So these are not normally it's not a big part of the options volume in terms of percentage wise, but it could be. But when it does happen, it signals something that you might want to pay attention to. Okay, so sometimes there are very big trades, even though it doesn't make up a big part of the overall volume, but you would see significant trades there, and we're going to actually pluck some out tomorrow. We're going to, look for ones that are happening, and we're going to kind of go through it and analyze it and show you how to use those new tools. So that's going to be tomorrow at 2 p.m. Eastern. You do have to register with Interactive Brokers. They're hosting it. It's going to be on their platform. It's not going to be live on YouTube like we're doing it, like we do our shows usually. Okay, so maybe, you could put out that link.
It's out there, D.
Okay. All right. So let's take a look right now at our pre-market report. We're going to, and then, then we're going to go to our questions. So this pre-market report up top, we start out with a calendar view and summary statistics of what happened in the pre-market from a high level, and we go back a week, and this lets you compare today's activity versus what typically happened in the last week. Could also eyeball if there are any trends or unusual days. If you click on it, you could bring up that date and you'll see what happened in a pre-market that historical date. Today, we're on April 8th over here. So let's go over what's going on so far. And we see right now we got 570 stocks that are trading higher in the pre-market, 260 stocks trading lower. There are 142 million shares trading on up volume, 47 million on down volume. And if we convert that volume to dollar value, we have $3.3 billion worth of stock trading higher, $633 million worth of stock trading lower. So looking at that, it indicates that so far traders in the pre-market have a bullish lean or bullish bias. let's look at it from a couple more perspectives, and then we'll move on to our questions. And I'm going to scroll down. And as I do that, now you see a more granular view of the pre-market activity. And we have a list of stock and stock symbols trading in the pre-market, along with the price changes, volume, alerts. They're divided up this way. Most active stocks, biggest percentage gainers in the pre-market, biggest percentage decliners. And looking at the count, I got 112 stocks that made it onto our biggest percentage gainers list. 37 made it onto our largest decliners list. And that also points to a bullish lean in pre-market trading. Now, to make it onto this list, we do have thresholds. That's why you don't see all of them there. Stocks in the pre-market can trade with low volume, low liquidity. They could be small moves. So to make it onto this list, you have to it has to meet those thresholds that we set. But that does include small cap stocks. It could include ETFs. It could include a leveraged product. It could be an inverse ETF, right? So to narrow down this group further, we could use the filters above. If you have a watch list and you track a certain group of stocks and you want to filter this report by your watch list, you could do that with this filter. We're going to use the filter next to it. In our example, the ETF filter. And when you click on it, that filter, you get a drop-down menu to select from. You have different ETFs. We're gonna click on the first one, SPY, which is the S&P 500 ETF. And when we do that, the list below will get filtered by stocks that are holdings in the SPY ETF. And what we did here is now filter our pre-market report by the stocks that belong to the S&P 500. Okay, so these are S&P 500 stocks. And now we have 14 of those stocks that are trading, that made it onto our biggest percentage gainers, and 4 on the decliners. So this also points to a bullish lean in the pre-market trading. Okay. And we looked at it from a couple different perspectives. They all kind of confirm and indicate that from those perspectives that there is a bullish sentiment so far in pre-market trading. So we gave it a couple minutes, Will. I'll take some questions now if you have them.
Nothing's popped in, D.
Okay. So let's take a look at SPY. That's my default symbol. When we don't have questions. And I'm going to look under, let's go under the tools. We get questions about these implied moves. So let's take a look at that. And when I clicked on under the volatility, under the implied moves, we get this visual chart. And you could see it goes back days, and we got these brackets going up and down. Then we got these green and red bars. And what do they all mean? And what this is doing is looking at an SPY, and it's looking at the end of the day straddle, the end of the day, at the money options, and saying, based on those options, what are the options indicating the next day's move in the stock, right? So if you do a straddle, what is the straddle is buying a call and a put. And if you do that, then the stock has to move by a big enough percentage to cover the cost of both options. So if it goes up, if the stock goes up, then the puts, will be out of the money and expire worthless. If it's above the strike, the calls will be in the money. Or if it goes down, the call will be out of the money, expire worthless, and the puts will be in the money. If it closes right at the strike, they both become worthless. So we're looking at the straddle price and saying, okay, what is the market forecasting tomorrow's move, or predicting tomorrow's move? These are market-based predictions, right? The straddles. So the price of the straddle, right? Whatever the price of the straddle is, that's the market's consensus. That's exactly where the buyer and the seller break even, right? If the stock moves exactly what the straddle is priced at. So that's what this bracket is here. So you see this bracket going up and down. That's what the straddle was anticipating the next day's move, right? And you could see, every day, sometimes it's higher, sometimes it's lower. So now visually, we could see that, from day to day, it could change drastically, right? Like here, you could see here, these are the percentage moves that it's anticipating, right? And then you could see that sometimes they're longer, sometimes they're shorter, and a lot of stuff could play into it. Sometimes there could be news anticipated the next day, so the implied volatilities will be higher. Sometimes, maybe not, and the implied volatility could be lower. But the idea here is that we kind of, have a visual of, ranges here, and then how did the stock actually do relative to where the market was predicting it, right? So we could see the errors here. How much was, because if the market was exactly on, exactly right, then we would see these red or green right at the bracket, right? It wouldn't be below and it wouldn't crash through. It would be right at. So the green is telling us the stock went up that day and by how much. The red pointing down, that's indicating that the stock went down and the magnitude of the down move. So now we see how much the stock actually increased or decreased, and we could see what the options were at the end of the day were saying or implying. So when this bar, like over here that I'm hovering over, the red bar you could see went way below that bracket. I mean, the stock had a move that exceeded what the straddle price was anticipating or implying. If the move was here within the bracket, that means, well, the straddle was priced higher, the premium, right, exceeded what the actual move in the stock on the next day. So we could see very little moves, like over here, almost unchanged. Sometimes they had like some big moves here. And now what that lets us do is eyeball, how often did these moves, right? Because we can now see them visually. Well, how often did the moves, crash through where the straddle was implying? How often did the move trade within, the anticipated, how the actual move was below what the anticipated move was? So we could see it's like most of the time. We could see when the moves did crash through, how much did they crash through by? Was it a little bit, a lot? Like here, it looks like it was a lot. Over here, it looks like it was right on. Here, it looks like it crashed through, but not by a whole lot. So we could see, that now we could, quickly get a visual of it in front of us. We could also see if there were any particular trends. And here seems like, you know, as far as like reds and greens, right? Just ups and downs. Sometimes we get a few downs days in a row, then a few up days in a row, like so far that is like, we get an update followed by a couple updates, get a down day, couple down days. And we could also see when it crashes through, right? When it does crash through, it seems so far that the downside moves, right, were exceeded where it crashed through the upside moves, even though there's one here. I mean, I'm just looking at it visually here. It looks like when it did go through, there's one up and two down. So this is this chart where if you're used to looking at it, it will point a couple different things. That's the point. The point I was trying to make is that there's different things that this chart visually could display for you, and just wanted to go over what each element on the chart means. And these are going back in time, you can see. So if we go down here, now we'll get the table with the summary stats, and we could see that on average, if we took the average of all these, that the options implied an up or down 0.7% move. Okay, that's what the options implied. How does that compare to the actual average move? Well, that was 0.5%. This is looking at the last 20 days. 0.5%, which is like a month's worth of trading, almost 20 trading days. So the implied tended to overestimate the actual move, right? If you on average, right? So sometimes it was below, sometimes it was above. But if we took the averages of the implied versus the averages of the actual, it overestimated the actual move by 0.2%. Okay. How many of the last 20 days did the stock end up at the end of the next day trading within the band, right? Within the implied volatility band, within the straddle band. Well, that happened 17 times. So our visual is correct, right? 17 of these observations means that the stock did not move by the end of the next day by enough to cover the cost of that entire straddle. Okay, or what the options were implying for the daily move, right? Because in here you probably have a daily straddle, but not in all of them. So this is what the implied daily move is from the option prices. Okay, 3 days it exceeded it, and we could see here these three: 1, 2, 3, 2 to the downside, 1 to the upside. Okay, and here you have the table of the data, right? Where the stock was, what the implied move was, what the actual move was, and if it was within its range. So that's how you could read this particular report. All right. So, well, no questions then, I guess, today. You're on mute, Will.
Yeah, but having a little bit of a cough attack, Bill. I mean, sorry, no other questions. Most of the comments, we're missing some people. I think some people are traveling for the eclipse today.
Okay.
So we're short some regulars on the Chameleon this morning. What are you doing for the eclipse today?
Are you doing something?
I'm not doing anything. Staying inside, staying safe.
Yeah.
I would be my eyes would be drawn to the sun, and I need to be able to see. So there was one piece of advice from Swami. He said, use your set your camera up, your phone, and video record it, and then watch it later. Point your camera to the sun. So there you go. Thanks for everything, D.
Yep. So I think I'll just end it here, not to just move off to many different reports. If there are no questions, we're just going to end it here.
And I did put into the chat the stock contingents trades. the webinar and the new feature, which should be
Yep.
great. That's at 2 tomorrow. And remember, you have to register on IBKR's website. They control the video and they'll let you watch it at any time. And actually, I'll also put in the link, a link to our library on Interactive Broker's site. We've done now 32 or 33 webinars. So we've been doing it for quite a while, every second Tuesday of the month. So
Yep.
awesome
right.
job, buddy.
Yep. Thanks everyone for joining. Stay safe out there. Have a great trading day. And hope to see you guys tomorrow.
Yeah, definitely stay safe with the clips. Have a great day. Thanks, Dee. Thanks everyone for